my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. At the start of June, prices peaked over the important upper time of the October 2019 to February 2020 shallow bullish shift pitch walk, currently at 163.45. The market seemingly started to settle over this shallow bullish shift pitch walk, and yes, prices did indeed trade over it. But, and it is an important but with bearish or indecisive patterns throughout their time over it. Hence, I suppose it was no real surprise that we started to see a descending triangle of sorts. I was initially not wedded to the idea at the time, but I was prepared for it. Subsequently, the market made a gapping move lower, breaking out lower from the descending triangle and reaching its appropriate target. It then stalled. In some ways, it was a gratifying stall, as it provided the idea of a descending triangle was a true idea, and once completed, something else would take its place. The stall was also coincident with the middle time, currently 157.10, on November 2020 to April 2021 bullish Andrews pitchfork, breaching it but not closing below it. And it was this that drove prices back higher, such that they were once more back up over the upper time of the shallow bullish pitchfork. However, this time prices did not tarry over the upper time and collapsed down with a big key reversal down on Thursday 3 weeks ago. Even in this collapse, prices started to show indecision, especially around the old neckline of the 2020 to date reverse head and shoulders bottom, currently at 147.85, as well as, to a certain degree in recent days, around the middle time, currently 157.10 of the April to June bullish shift pitchfork, bullish Andrews pitchfork. This pitchfork actually may be reasserting its role as the bullish angle of attack of the market going forward. What I can say is this: the fall was very complicated over the end of 2 weeks and 2 weeks ago and the start of last week. A very severe amount of indecision, one that went on to the fourth countering level in fact, before prices moved up over the middle time. It is not over as yesterday's high was capped by the approach to the upper time of the old October 2019 to February 2020 bullish shift pitchfork, and today has so far seen a countering bearish pattern, a possible bearish opening black Mariposa, even a possible bearish belt hold. There is a great deal of turbulence between the neckline below and the old upper time right above right now. London coffee futures. Okay, once more I wish to just recap the big picture. We had two sideways triangles in this market, one from summer 2020 and the other more recently since mid-March. The early one had a false break higher, the new one did not. Since then, prices have reached all their targets upside for both these triangles. There was some follow through on higher. Prices reached up and initially failed at the big 50% Fibonacci line of the February 2017 to April 2018 move at 1694, and actually in some style, a huge key reversal down, closing below the middle time, currently at 1818 of the early April to mid-May bullish Andrews pitchfork. Now this pitchfork has been crucial in setting the timing for the moves higher. Prices next tested down to the lower time, currently at 1741, breached it and even closed below, but only the once. There was no second confirmation close below. This seems to have galvanized the market from its reverie, and prices shot up with an immediate countering bullish double, and have overall rallied ever since, in between the lower time and the middle time of that same early April mid-May bullish Andrews pitchfork. All this prior toing and froing over June created a bull flag pattern, and this seems to have been the most recent driver of the moves higher. Now, an initial target X in the 1700 area topside for this pattern was already achieved before I went away on annual leave. A full target X1 for this pattern would be in the 1830 area off the top of my daily chart until recently. But with the moves high, it has actually entered the frame right now. Please note, full targets are not often achieved, not that often anyway. Finally, there was an interim target for this pattern in the 1775 area, and designated by me target X2. I'd left it on my daily chart from before my annual leave. Target X2 was achieved last Friday. Since last Friday, the action has become even more interesting. We are on course today to have a combined bearish opening black Mariposa and bearish engulfing pattern as well, right at the top of the market. Now that wouldn't concern me greatly, as the bullish incentive is still with the bullish Andrews pitchfork. However, the market has pierced the bullish Andrews pitchfork, with a possible first close below it, below the lower time, since late June. This has raised a cautionary question mark with me. Or as I said in my last commentary back in June, and I quote, "Only a full breakdown of the lower time of the bullish Andrews pitchfork will negate these targets that are still left, and even then, such an action may only push the market to a shallower yet still bullish shift pitchfork for the same period." End of quote. Caution though, just in case. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.